Hey guys, what's going on? It's Rag to Riches with another podcast episode on the crypto portfolio. Got some interesting news for you guys, which I wanted to touch on today. But first and foremost, we got some trading to do because, like I had told you in our original episode, we have some mining rewards. Heads up, I am a cryptocurrency miner currently mining Ethereum Classic and Zilliqa using iPollo SE Mini Plus miners, and I actually want to show you guys what that process looks like once again, just to kind of drill into the narrative how cool mining is and kind of the profits that you can expect to see from it. So last night it looks like I got deposited 72 Zilliqa, so if I go over into market and sell 100% because I have no plan on holding these assets, looks like I'm going to coop in a profit of, what do I call it here, see what the dollar denominated value will be. Zilliqa, 72 Zilliqa at a spot price of 1.694 cents. So it looks like we're going to be getting a profit of here of $1.19. Phenomenal. Now let's go over into Zilliqa and see what kind of profits that we have got overnight for Ethereum Classic as well. So overnight we got 0.2355632 Ethereum Classic. Good for me. Yippee day, hurrah, hurrah. And candidly, I don't like the Ethereum Classic, project. There's a lot of logic behind that, but at this point it's a little bit too early in the morning. Rolling off a clean 6.5 hours of sleep here, so I'm a little bit tired. So let's sell off this Ethereum Classic. And then it looks like we have $4.59 to play with as far as USDT to actually trade onto the market. So here is the methodology in which I use to actually determine what I'm going to be buying with these profits here. So I have 10 altcoins, which I have been slowly scaling into. These altcoins, I have high conviction into their respective projects. These include Polkadot, Polygon, Render, Ethereum, Filecoin, VeChain, Chainlink, Fetch AI, the Graph, Kava, and then the two coins that I'm mining. This is a reward from the VeChain network, and then of course the OG Bitcoin, but I don't keep that on chain. I keep that on a cold storage hard wallet. But on that note, looks like we need to buy today some Kava, GRT, Fetch AI, and Chainlink, but this will depend on what the actual how it actually ends up turning out when I actually put in these orders. So first thing I need to do is find my favorite decentralized finance platform, Kava. I'm gonna go to market buy 25%, and then it looks like in a US denominated value, let's actually pull up our handy dandy calculator here just so I can get my purchases right. So if I got $4.59, divide that by 4 tokens because the minimum order size on Binance is $1. Looks like we'll be buying $1.1475 of every coin that we'll be buying today. So looks like let's add in 114 here. Kava, boop, buying that. Going into the next coin that I plan on buying here. Let's see what the most minimum or lowest value denominated asset is. Still Kava, so let's go back and buy some more Kava. Spot trading. Back to Kava. Now we're gonna buy market amount 114. Come on, where's the 4? Total, that's why that wasn't working. 1.14. Bought some more Kava. Go into wallet. Looks like our next lowest one is going to be the Graph. So go back to spot trading. The Graph is a really cool project. It's essentially a project that's doing indexing work for respective blockchains to make it easier for developers and anyone else who may want to actually use publicly available blockchain data, but in a usable way to actually be able to do so. So it looks like we'll be buying about $1.20 of the Graph. Put in that order. Bada bing, bada boom. Done. And then going back to our handy dandy wallet. Let's see what's left. Now we got Fetch AI. So then our last buy for the day is going to be the AI platform built on top of blockchain, Fetch AI. So let's go here to FET and then market. I'm going to use the remainder of our USDT, it's a US dollar stable coin, to buy some Fetch AI. Now, our orders have been placed, they have been filled. Looking towards tomorrow, it looks like our purchases, depending on market conditions today, are going to still be Fetch AI, Chainlink, Kava, and VeChain. I haven't really been buying a lot of Render recently because it's just been blowing up as far as price appreciation goes. All these respective altcoins outside of Matic and Polygon, I've been actually purchasing using my mining rewards, with the exception of one purchase I did towards the beginning of the month because I'm trying to scale into these respective projects. But Fetch AI has been a really big outperformer. We're looking at $173 in USD today compared to, call it, in the mid 140s for the remainder of the assets here. So it might be a little while unless there's a pullback in Render for me to actually have a chance to buy some more of that, but that's okay because at the end of the day, I think a balanced portfolio approach is a good way to diversify your risks in the public equity markets as well as the fixed income markets, and then especially in the cryptocurrency markets, provided that you do some research in regards to the tokens that you're buying, just given some volatility into the space. But why did I sell my Ethereum Classic and my Zilliqa this morning when I could have just held on to those projects? Well, as Albert Einstein once said, compound interest is the eighth wonder of the world, and I'm trying to capture some of that public equity market returns while they have long-term assumptions of 8 to 10, or 7 to 12% returns, depending on the dividend yield and the time of the market cycle in which you're beginning to purchase. As far as long-term returns go, I'm trying to get a little bit further out in the risk spectrum as far as this portion of my balance sheet to get higher levels of return for the long term, because I do not plan on working until I'm 65. The rat race is certainly real and I want no part in it. But the cool thing about these cryptocurrency projects, yes, you tell me every time I look at the staking platform about these new terms of service, which I've read, is that I can actually stake my rewards for my cryptocurrency for rewards, because many of these coins that I'm buying are proof of stake protocols. And every single day I do this, I get an annual raise. Now this can range depending on the yields that are available in the respective projects that I'm purchasing and then staking, but it looks like today your friend Rags to Riches is getting a 29-cent pay raise. Hooray, we're going to Ibiza. But the way I think about this, while I continue to stake these coins and we get into some of the market news, is that over the long term, provided that I continue to stake into these projects, provided that the cryptocurrency market space continues to evolve, continues to develop, continues to gain market share and market cap, these rewards are not going to be in terms of pennies, but are going to be in terms of dollars, tens of dollars, hundreds of dollars. And then over time, while currently Fetch AI is yielding a yield of 4.1%, perhaps the token itself won't be worth, call it 20 cents, it'll be worth $20. And then a 4% reward on $20 token is a lot better than what it currently is, right? Kava currently yielding 11.6%, VeChain is yielding 1.1%, Polygon is yielding 2.1%, Polkadot is yielding 13.3%, and Ethereum, the proof of stake now blockchain since the merge, is yielding 4.1%. So yeah, it's kind of like the idea here, right? Mining coins, selling coins, and staking coins, and then in combination with my dividend portfolio, my growth portfolio, I like to think that this is a way that I can try to find some outsized returns in today's market environment to beat the traditional equity market, because your friend Rags to Riches is certainly wearing rags today, but he will be hopefully rich one day into the future. And I suppose that's a relative term based on what your perspective on wealth is. But on that note, close out Binance. We got some news here for us to touch into before I head off to the gym. Order of man, don't start a mutiny you can't finish. Yes, sir. Spot Bitcoin ETF approvals could add 1 trillion to crypto market cap. CryptoQuant says. Blockchain analytics firm CryptoQuant's model predicts that 155 billion will flow into Bitcoin market cap should the ETF be approved. Yeah, so like long story short here with this, there are currently SEC approved futures exchange products for Bitcoin and then recently Ethereum. And essentially that allows investors to speculate on the future price change of those underlying assets. You can think of it as a derivative contract, or a contract that prices the change in price of the underlying asset. And while those are good because it begins to allow for institutional investment into the space, they have some not negative implications, but there aren't full regulatory approval of the asset class. I think right now cryptocurrency as a sector has regulatory uncertainty, leading to, in some respects, limited price appreciation because you're never going to have institutional capital be able to invest into those assets. 401k, pension funds, insurance companies aren't ever going to invest into the Bitcoin blockchain until they have regulatory certainty that doing so will be protected, sanctioned, and then able to be done so into the long term. What the spot ETFs are going to allow these institutional investors to do is exactly that. Invest into the space in a regulatory framework in a way that they're going to be able to do so and justify to their investors. And until that approval takes place, we are going to see not necessarily muted price appreciation, but not the full potential of the space that I think is possible. Just the other day, I think it was on Monday, there was fake rumor of the SEC approving BlackRock's spot ETF for Bitcoin, and the price jumped up by nearly 10%. Now, much of those gains have been recently pulled back as the market digested that that was a rumor, not actual news. But if you can appreciate the impact of what a rumor had, then perhaps some of the noise that this article is alluding to might have some credence, right? When there's spot ETF approval, there's likely going to be big price appreciation into the cryptocurrency market space, and I'm trying to get positioned in the meantime before that certainty occurs to actually make some profits from it. Speaking of Binance, my favorite exchange, it looks like Binance's US affiliate cuts off crypto withdrawals, according to CNBC Crypto World. We're not going to be looking into this video today because I certainly do not want a guideline strike from the good old YouTube and our, I guess, where Susan Wojcicki used to be the CEO of YouTube, but I'm not sure about it anymore. But you know, one of the issues with regulatory uncertainty is that financial institutions that aren't abiding by the clear and uncertain rules by the SEC and other US regulators are getting cut off from traditional US banking systems, right? And I think this speaks more holistically to the intent of cryptocurrency. One of the issues with the traditional financial system is that you do not have control over your currency, the amount in which it is inflated, who you can send it to, when you can use it, and how you can use it. And this is reflective in some of the changes that have been happening on Binance. Binance, because they are, wouldn't say skirting regulatory authority, but rather they are resisting uncertain regulation, trying to operate in a free market space where there isn't clear guidance, has been recently cut off from many banking institutions to actually use US dollar denominated assets, such as the dollar, or traditional banking systems to actually help their customers and clients to purchase cryptocurrency using the USD. Now, this creates a problem because for many people, they aren't necessarily able or understand how to purchase Bitcoin without using a centralized exchange like Binance to do so. Some of that spot trading that you were just seeing me doing, I was only able to do so because I had crypto on chain that I was able to convert into a stablecoin to then purchase other cryptocurrencies. But until there is the ability for people to transact in crypto using US dollars, because that's the preferred currency of people at this time, it's going to be difficult for there to be large retail investment into the space, because not only do many people not understand what blockchain technology is or what the technology is for, but they also don't have the ability to purchase it in dollars, which creates some convolutions and issues. Getting into our last article for the day. Looks like, speaking on to what I was telling you guys about earlier, Bitcoin gives up gains after BlackRock denies ETF approval report. Bitcoin rose suddenly on Monday before giving up nearly all its gains after asset manager BlackRock denied a crypto media report that U.S. regulators had approved its high-profile application for a crypto investment product, that is the spot ETF. I don't know nor really care who this Eleanor Tourette lady is, but she's just kind of confirming, at least according to Fox Business, this news here. But I do want to maybe skim through here and see if there's any interesting news here. Yeah, so this section here I think is interesting. Crypto markets have just shown how sensitive they are to any potential good news with their premature rally today on rumors on the approval of a spot Bitcoin ETF. Ben Latter, global market strategist of eToro, An internal investigation is currently underway. We are committed to transparency and will share the findings of the investigation with the public should it come public once it's concluded in 3 hours. So essentially like Cointelegraph, you can think of it as like the CNBC, Fox Business News of cryptocurrency, released these Falk news, some speculation in regards to the release of the spot ETF, and it did have a market moving effect. But I think when we're thinking about crypto as a asset class, it's underinvested, underunderstood, and underallocated into people's portfolios. There's been massive price declines in the past year, given some of the macro events that have been happening in the space and to the wider economy. Think rate hikes, FTX, weakening consumer demand, consumer savings are decreasing as rates are going up. And then as a consequence of that, we are seeing very much depreciated and depressed asset prices for cryptocurrency. It's my personal view, and while this is an investment advice, that these assets are undervalued, that now is a very interesting time to buy them if you're willing to take the time to understand the assets and to deal and stomach the volatility that's inherent with them for the time being. And the intent of this channel is to ensure that as we approach the timeline of regulatory approval, we are positioned in a place to capitalize off the bull market. For me, I never plan on selling my cryptocurrency because I think these assets are long-term holdings in my portfolio. They have the potential for outsized returns, not in the next 6 to 12 months, but in the next 6 to 12 years. And then accordingly, I want to build up large positions today to have a brighter future tomorrow. On that note, I need to hit the gym because it opens at 5 and today is shoulder day and trap day. So, I got to stay looking good to feel good. So I'm going to go do that. But in the meantime, please enjoy your day. Make sure it's productive. Be kind to each other, especially in today's volatile and crazy world. A lot of things going on here, which kind of make me sad as an individual. But on that note, please turn your rags into riches. Be sure to like, share, and subscribe if you enjoy what I'm doing here. Let me know what I can do better. Let me know what I'm doing great. Let me know what you want to hear more about, because at the end of the day, this channel is about you, the viewer, and everyone else who's interested in this asset class. Kind of become a personal hobby of mine since I began to mine over the summer, so I want to hear what I can do better for you. In the meantime, have a great day, and we will talk soon. Bye now.